So, Don, it's going to be very interesting. There are people in the background everywhere today.
So we had.
You can't use the names.
We had a show a while back. Was it last year?
Yeah.
When we had a party. Well, there's another party here today, and we had to kick everybody out. Scott's kicking people out. It's 6 o'clock. You came down here with.
Oh yeah, it's serious business.
Out, and they're still around.
So in the background, creeping behind me is Ed Newman is behind me over here. And if you poke your head here,
Hello.
Hey, Brown's here too. Wait. Just laugh. Just give us a laugh.
There you
That's
go.
what I mean. That's a good laugh right there. That's a good laugh.
Come on, Ed, give us your laugh.
Oh my God.
Oh, he doesn't. He
can't even laugh.
Smile.
Don's not funny enough for him to laugh, so don't worry about it. All right. All right. You want to do this the right way or not?
Let's do it. Let's get it
All right.
going.
I'm Scott.
I'm Don.
And we're talking real estate. So, Don, we have a veteran of the mortgage world here today.
Somebody that's been around a long time.
I'm telling you what, and she can articulate things in a way I was just blown away when we talked off
We
camera.
got some good stuff. So
Pretty good stuff.
I remember her from a long time ago when she was at PNC Bank. So yeah, I'm excited about this.
So that's going to be awesome part of the show. One, guys, you know who else is here too? Mel is in the house. Ladies and gentlemen, Mel is in the house.
And Steve Kreitz is out there.
As soon as he heard the word Mel, he was like, there it is. There we go. As soon as he heard the word Mel. So that's always a good thing. So,
hey, look what episode this is.
Yeah, I don't want to talk about that. Chick-fil-A doesn't even use that order number. They don't even use that order number. No, they don't.
Really?
They don't. They go right from 68 to 70. They don't use the
So this is right in between that.
Yeah, it is right in between that. You're right. So that's how that goes.
There we go. All right.
That's exactly how that
keep
goes.
It clean. Keep it
All right.
clean, guys.
So, Don, I'll tell you a couple other things. So, you and I both have a little bit of home improvement stories from the road to talk about.
Yeah, I'm excited about that.
And we found a ton. If you've been following us on Facebook, you see a ton of stuff. What realtors see. There's going to be 3 or 4 things today.
Yeah.
Because we just see the dumbest stuff. Like, and that's the only way I can phrase it. Like stuff you just go, huh?
What's going on here?
Start scratching your head and go, I don't know.
And why? Why would you do that?
Very first thing we'd like to know is where you're tuning in at. Where are you tuning in at? That's what we'd like to know. So in the chat, tell us where you're tuning in at real quickly, if you would, please. Because we would love to know where you're tuning in at.
You guys have fun tonight.
Bye.
We sure will, Ed. We're going to have a ton of fun.
There he goes.
Ed Newman, ladies and gentlemen, known East, West. Petoskey's his big spot. That's what he's known far and wide.
Charlotte.
I'm telling.
Is that where Charlotte?
Huh?
He's from Charlotte.
Well, I know. Well, somewhere.
He's got a house.
Yeah, somewhere that way. So yeah, Dawbone Heights, where are you tuning in at? Where is everybody at? So that's a good thing. So give me the captions if you would, please.
Man, it is hot out. So we got anything on that? You're talking about the hot.
So I can tell you this much.
No, I mean
this show.
Mel's drained. I don't know what. She has no energy. She's not bringing it tonight, but she's here at least.
Listen, Don, you had to sit at that desk in this office and sweat like crazy and just pick up phones. She got 74 phones stuck around her neck.
Yeah.
You ever see that Monopoly piece, that little Monopoly card at Community Chest, where the guys got the phones all wrapped around? That's her. That's what it is. She has
good one.
Phone cards all wrapped all around her and stuff like that.
Good vision. That's a good
Absolutely.
view.
So,
a
pool inside the office?
Yeah.
Adam Oberski, did you hear that? We need a pool inside the office. The girls would like the ladies would like a pool.
Retracts from the floor.
Client coordinator / lifeguards.
Slides out,
That's what we need.
Get in the pool.
So we're like, our company's like every other business. The heating and cooling guys, especially cooling guys, are really busy. They're working, helping people with their air conditioning. And of course, our air conditioning's out, not only down here, but upstairs in our offices. So it's a little bit steamier than it normally is in the buildings.
So you know what that means, ladies and gentlemen.
By 7 o'clock at night, you're kind of like dragging a little bit.
You know what that means, don't you?
What does that mean?
We need 3 Stripes Heating and Cooling. This segment of the show is put out to you by 3 Stripes Heating and Cooling.
Let Lisa know that.
Yeah, absolutely. Lisa Boyce, I'll get you the information. 3 Stripes Heating and Cooling. Those are the only guys I ever call and I ever refer to anybody. 3 Stripes Heating and Cooling.
We had them on the show.
Yeah, John Becker is a phenomenal guy.
Yeah,
phenomenal.
It's really good. Interesting.
Yeah, absolutely.
Very good one, yeah.
So, what? Oh, I just lost my train of thought there. I would love to talk about bridge loans today. Okay.
And we're going to.
I definitely would. So I would think we'd probably bring our first guest out and start to get in that conversation.
We can. But so let's lead up to it. So what's some of the things that buyers can do when they're competing in this type of market and they want to sell a house and buy a house? And this is the biggest, probably the biggest one you can do, other than taking money out of your 401k or selling your house, moving somewhere, or renting, and then buying or something like that.
Right. So, Don, we talk about this
avenue
stuff quite a bit, right? Mel's a rock star. See, her biggest fan.
I know.
That guy's Steve. She thinks you're the greatest. Just so you know. So we talked about this quite a bit. The things you can do, the things that we've seen in the market, right? So people are going and renting somewhere for a year and then buying, right? People are, selling first and then trying to be able to qualify to buy. Bridge loan is going to be a great tool,
Right.
to make those things happen.
Right.
That's why we brought an expert. We brought somebody that's been doing this for a long time and knows what she's talking about. So.
And there's not a lot of companies that do this sort of thing from what I've seen.
Yeah.
I haven't seen this out there too often. So I think it's really important to find somebody that can do it, that has done it, and knows what they're doing. And so
Right.
that's
And,
something we
you
have.
want the cleanest information. Now, people trust us for a real simple reason. We bring the clean, good information.
Right.
That's what we do. We bring the clean, good information. So
Absolutely.
we want to introduce our guest and bring her out.
So I've known Paula from, like I said, a long time ago, from, I don't know, 18, 19 years ago, doing a mortgage for PNC. And she's been in the business all these years. And Paula Switowski from Union. What? Switsky.
That's okay.
That makes him look bad,
I'm
doesn't
Polish.
it?
I'm
For so many
Polish.
years. I've known you so many years. I can't even say your name right. Jeez. That was really good.
Well, I don't-
And you're
I don't
Polish.
pronounce- And I'm Polish. And I don't pronounce her. I don't use her last name. I call her, hey, this is Paula.
At my kid's graduation,
So-
you're not getting any pierogies, okay? Because you can't even say a name right. You can't even say a Polish name correctly.
I am Polish.
Killing me. So try one more time. Ready? Reel it back in one more time for Don. And go.
Paula Switowski.
Sawitsky.
Sawitsky.
Oh
God
my God.
dang it. How many beers do you have? Jesus.
Three.
All right, ladies and gentlemen, here we go. Here she comes. Here she comes. Good to meet you. Good to meet you. Good to see you. Step on in here. Step on in here. Go ahead. They've known each other so long, ladies and gentlemen, that Don cannot do this
We're
for
not
us.
best
Dispel
friends,
this myth.
but-
Say your name correctly
she's been
for the
in business
audience.
a long time. She has a very good reputation in the business.
Let her
I can tell you that. So.
Paula Sawitsky.
Switsky, all right.
There we go.
So what, you didn't correct me when I must have said
No,
it on
I
the
was just
phone.
laughing over there.
She
No,
was being
because my
polite.
Well, of course. But I was thinking, I was going to come over here and harass Scott because earlier today when he was doing the little intro, he said, we've got this mortgage lady coming on to talk about bridge loans. And then he talked about some other guy that used to do them for him. I'm like, wow, I don't even get my first name on there.
Wow, I'm
no
sorry.
plug whatsoever.
Man, that's all right. Hey,
Nice.
listen, I can take the heat. We want to give you your due, kid. We want to give you your due. So tell us a little about your background.
So my name's Paula Sawitsky.
Switsky.
Sawitsky.
Like I've been saying.
So wait, you're killing me.
Yeah.
You're killing me.
Sawitsky.
I am Polish, though, by the way. And he is part Polish.
Yes, I am.
Yeah.
I can pronounce the names correctly. He
Gołąbki?
can't. Yeah.
Yeah.
I don't.
Yeah,
Yes, you
for
got
sure.
it. You got it. And what okay, Gołąbki? You like Gołąbki? Okay. Do you like? Wait. Do you like Charnina? Good. That's duck blood soup, but it's terrible.
So,
So you don't ever want it.
So, favorite Polish restaurant around town?
Oh, the Rhapsody.
Really? It's Hungarian, isn't it?
Is it Hungarian?
It
Yeah.
is Hungarian.
Yeah.
But it is,
That's
Oh,
cool.
but
That's
it
pretty
is
close.
It's
That's pretty
very
close.
close.
Yeah, it's pretty close. Neighbors.
Well, they
Neighbors.
used to be brothers.
Three brothers.
Brothers,
Yeah.
yeah.
Still is.
Yeah.
So Rhapsody used to donate to our golf line. They're a great restaurant. So definitely a good place. Good place. Yeah.
So there is another place out there in Meldale. Sabina's.
I've heard of it, but I've never been there.
It's awesome.
Yeah.
It's
Yes.
awesome.
Okay.
You sure?
Sabina's?
Yeah.
Absolutely.
All right.
Have you been there?
I have.
It's absolutely. It's
Can you
awesome.
say her last name?
Switsky.
That's not
Hey, everybody give Don a round of applause. Give Don Lawrence a round of applause, the champ.
The buzz is going
That's
away.
right. That's right. He get it together now, boy. He's getting it together now. Look at that. Look at that.
Yeah, all right. So I had a beer too. So
Yes, you did.
It's all, it's all good.
Ladies and gentlemen, Billy,
I offered.
Knock, Steve Kreitz, you guys got to give Don a pass because he's had a couple beers at the get together, the retirement party we just had. So he's tried. He promises he'll stand up to his Polish heritage. I promise.
He's doing great.
He's doing better.
Thank you. Thank you.
So tell us about the mortgage world these days.
Okay, well, let me finish with my history
Yeah.
of the business. We didn't even go there. So 21 years in the business. I'm with Union Home Mortgage. Union Home Mortgage is an independent mortgage bank. I'm the area sales and growth manager for the state of Michigan. So my job now is I manage a team of people across the state of Michigan, and we open up new branches. I was just in Traverse City, came from there too.
Really?
We're opening a branch in Petoskey, so you'll have to talk to
Ed Newmy, where are you?
Boy, city dropping.
So, but basically what I do now is I still originate a little bit here and there just because I want to stay fresh and
Sure.
make sure that I'm still engaged with products and programs, and but primarily just growing the state of Michigan, looking for loan officers that are looking to explore their career here in the state of Michigan.
How many people would you say you manage, you say, or how many people would you say?
So we have 83 in the state of Michigan right
Okay.
now, 17 branches across the state. We actually opened up our first branch here in Michigan in 2011.
Okay. What makes Union Mortgage stand out?
Besides our bridge loan.
Oh yeah, absolutely, absolutely.
Well, in addition to our bridge loan product, because we are one of the very few places that I know of that even offer a bridge loan product,
Yeah,
is
definitely.
our company culture. I have never worked at a company that, in this business, it's hard to strive for perfection, right?
Sure.
Like nobody is perfect. There's always quirks. There's always so many things that can go wrong in this business. But I've never worked for a company that works so hard every day to be as close to perfect as they can be.
Like, so give some example. Can you give us some examples?
So some examples. Every morning we have a call. It's called a Rudy call. And every morning we jump on our Rudy call. All of the senior leadership basically look at what went well the day before, what we can improve on going forward. Anytime a loan officer or a partner, we call all of our employees partners.
Yep.
Anytime somebody makes a suggestion, those suggestions from the day before are reviewed on our Rudy call the next day to make sure that we're implementing things that improve their job every single day to make it get better.
So almost like instant improvement, or not instant
Absolutely.
improvement, or daily improvement. Yeah.
Daily.
Yeah.
Absolutely.
That's a phenomenal thing.
That's great. The culture of the company is very, very important
Absolutely.
to spread that information and that type of mindset out to other people. So what does Rudy stand for?
You're going to ask me a question that I don't know. I'm not sure.
Okay. I thought there was some meaning behind it, like the
There is.
CEO's
It's a-
Rudy or
Did you ever see the
Are
movie
you-
Rudy? That's probably what it is. Improving a little bit at a time.
No, it's a process, but
Yeah.
I have to get more information.
no
on that
worries.
part.
That's
But,
okay.
but that's a really great thing. You know,
It
we
is
Totally
awesome.
stumped her.
here at Century 21, there was a retirement party here today for a woman that's been here 20 years. This company's very similar in that regard
Mhm.
to being the best it can be, and
Absolutely.
it's a great culture that we have here. Do you agree?
I agree on
Mel,
that.
do you
Yeah.
agree?
Totally.
And it starts with the
The
broker
ownership, the
Yep.
management,
Yeah.
and that's a huge thing that filters down through the whole company
Yep.
and to our customers, which are our viewers and everybody else out there. And it's a huge thing. It's very, very important that we understand it being in the business that we're in, and we hope that our viewers and our customers see that sort of stuff that comes through. So that's really good. I mean, how often do companies we've had guests on here saying that the culture of the company is that important? It's awesome.
It
So
is.
that's
It's
good.
incredibly important. And I think that if you were to pick up the phone and contact any one of the employees at any one of the partners at Union Home Mortgage, every single person would say the same thing. When I made the decision to join Union Home Mortgage, and it was a big decision for me to make that move because I wasn't unhappy where I was at, but I didn't know it could be that much better.
Yeah.
And when I was making that decision, I started making calls. I knew a lot of people that worked at Union Home Mortgage, and I called the people that I knew and I trusted first. And everybody said the same thing. Everyone said it's the product mix and it's the culture of the company. That you feel like family, you feel like you're important, and that there's just this engine behind you that is just doing everything it can to push you into success.
Well, you said something very important, though. You said you called people that you trusted, right?
Yeah.
Trust is a huge thing. This business is based on quality comes from trust. Yeah. I mean, that's a big thing. So the fact that you made that first step probably made the rest of it a little easier. Yeah.
Absolutely.
People do business with people they trust. They want to be with people they trust, and it's a huge thing. So,
So why do I do
And
business
people
with
they
you?
like.
and you like
Yes.
who you trust and like, right? Exactly,
So why do I do business with you every week?
because
Ladies and gentlemen,
because it's me.
come on.
Because
I know
it's
it
me.
is. It is. It is. It is. It is.
So, very good explanation. Thank you.
Yeah.
So, okay, so what's going on in the mortgage business right now? What do you see? How do you see the future and what might be happening in that regard?
Well, first of all, it's an amazing time to be in the mortgage business, just like it's an amazing time for you guys in the real estate world.
is.
I mean, our market is so cyclical. We have that roller coaster effect where, the market is up and everything is great and rosy and sunshine and rainbows, right? And then we have those valleys where it's a little bit tougher and you're really just kind of pounding the pavement to work. So it's an awesome time to be in the industry. From an interest rate perspective, I think we're going to continue to see the interest rates where they're at right now, at least through the end of the year. Everything that we're hearing, all of the market insights that we're getting was saying that we'll continue to see this trend through the end of the year. And, you know, the biggest question that we're hearing right now is about the housing prices.
Right.
And,
The bubble,
you know,
the bubble of speculation.
yeah,
Yeah.
speculation. And are we going to see what we seen back in, you know, 2005, 2006, when, you know, the market collapsed and foreclosures going through the roof? And, you know, that is definitely not something that I see happening this time. And now, granted, I'm not that market expert, but the one thing that I can say is that what we're experiencing now is a true supply and demand issue.
Right.
You know, previously, you know, we had tons of houses on the market. People couldn't make their payments, and we had some unscrupulous lenders that were out there doing a lot of very unique products that were putting people in positions that, you know, shouldn't necessarily have been in.
Right.
You know,
Absolutely.
and not necessarily, you know, not that those products couldn't be great products for the right people, because when you're putting somebody into an interest-only loan, or a negative amortization loan, where it makes sense for that borrower based on, you know, their income, their job, and how you know, financially savvy they are.
Sure.
Right. Those products have a place. They didn't have a place in the community for just the average person, especially when you don't have a professional that's helping to guide them and make them understand, yeah, you've got all these great benefits to this product, but here's the other things that you need to consider and be prepared for later on.
Right.
And so when, you know, we started to see those foreclosures and people couldn't refinance out of their existing mortgages into fixed rates, that's when we started seeing all of the issues with people not being able to make their payments.
Right.
And that's not what we're seeing today. Right. This is a true supply issue.
Right, and it is. I mean,
Right.
it's there's when you have one house in a quarter mile that's for sale, it's going to get a lot of action. People are going to want to buy it. Prices are going to be driven up. All those things are going to happen because there's only one of them.
Right.
And it doesn't matter what neighborhood down we go into. It's the same everywhere where we go. It's the same in Westland. It's the same in Monroe. It's the same up in Traverse City. It's the same everywhere. It's not. I mean, it's supply based, right? Yeah, and that's not inflated. That's just supply based.
And the prices are going up because people want that. They need to have a house, and they're doing what it takes to get that house. You know, we have many showings on a lot of these homes, multiple offers, and it just goes to show you that with multiple offers, these people are trying to do the best they can to get the house, and it's going to go over full price, and they may do appraisal guarantee. And out of those offers, only one person can get it. The rest of those people are going back out into the market to try to find another house.
It's like in a pond. Okay, you drop a piece of food in a fish pond, and 100 fish go at it. One gets it, the rest of them look for the next one. Where's the next one? And they all just start traveling around. Yeah. I mean, there's worse analogies you could use. You can use locusts. You can use all kinds of natural bad stuff.
Cicadas.
Yes,
Yeah.
I was just gonna say that.
Cicadas with that noise. I got that going on already.
Top of the news circle right there.
Yeah.
So yeah, okay, very good. Okay,
Okay.
so going from interest rates to bridge loans, how do interest rates on bridge loans, and can we start? Let's start the
Talk about
bridge
the bridge
loans.
loan product.
Yes.
Right, and folks, this is definitely something you want to hear. So she's definitely going to lay it out for you, explain it in a way that makes sense to you.
Okay. So basically, a bridge loan is temporary financing. And that temporary financing allows your customers to bridge that gap between the sale of their current primary residence to the purchase of their new primary residence. With what you guys are dealing with today, writing offers on a property, if you write an offer with a contingency, the likelihood is that your offer is going to get set aside. It's, you know, not going to get looked at, and
Absolutely.
they're going to miss out on that deal. So the bridge loan bridges that gap and allows us to put borrowers in a position to where they can purchase that new home without having to put the contingency on the sale of the existing home.
Yeah.
Okay. And how we do that is we it is a portfolio product, and what that means is that it's exclusive to Union Home Mortgage. This is Union Home Mortgage's product. It's not an agency product like Fannie Mae, Freddie Mac, FHA, anything like that. It's not through any of the agencies. It is Union Home Mortgage's product.
So you guys hold
Exactly.
right?
Yeah,
Okay.
because it is a temporary product, right? So we hold it on our books. So what it allows us to do is it allows us to do a cash out refinance. So we actually pay off the existing mortgage on the borrower's current primary residence, and we pull the cash out to allow them to put the down payment on the new home. There are a few caveats to that. They have to have, or the maximum loan to value is 80%, which means that we can't borrow more than 80% of the home's value to be able to pay off the current mortgage and pull out the money that they need to put the down payment on the new home. They have to put 20% down on the new home. So they have to have that equity position. So if they've got the equity either from the bridge loan or cash on hand that they have of their own, the combination of the two would have to at least equal 20% on the new home. And the purchase of the new home closes simultaneously with our bridge loan. So we close the bridge loan and the purchase of the new home the same day. Okay.
Okay.
The great thing about that is a lot of the time when you have borrowers that are doing a contingency on the sale of their home, the reason they're doing that contingency is because they can't qualify with both house payments, right? So if they can't qualify with both house payments, that's why you have a contingency, right? Because if they could qualify with both, then it wouldn't matter. But in this case, what it allows us to do is we do not include, because it's held on our portfolio, we don't include that payment in their debt to income ratio. So the interest only, it's an interest only payment. We do not include it in the debt to income ratio. The only thing that's included in the debt to income ratio for the purchase of the new home, because the new home purchase is a Fannie Mae product.
Sure.
Okay. So we have to include the taxes and insurance from the existing residents in the debt to income ratio for the new product.
Okay. So let me ask a question then. So you're using the bridge loan as a payoff plus the down payment.
Yep.
Right. Now, do they have to use Union Mortgage for the purchase too as well? Okay. Okay.
Yep. So it is both products.
Yep.
Yep.
And then they pay off the bridge loan
once they
close.
Yep. So it's temporary financing, and the time frame is typically 5 months. There are some caveats to that. In the event that we think that there's going to be an issue that they wouldn't be able to sell it in 5 months, we have you call our servicing team. But with what you guys are experiencing in the market right now, and we were talking about the locusts and the fish, not going to be on the market that long.
Right. So what kind of snags or what kind of challenges do people have when applying for a bridge loan?
Well, there's going to be some credit score requirements.
So do you have general guidelines?
So credit score requirement is a minimum of a 720 credit score.
Okay.
So we are looking for well-qualified borrowers to be able to utilize the product. The debt to income ratio on the new purchase can't be more than 41%, which is still very generous. Okay, because there's very few products that go over 45%. There's a few out there where they'll go up to 50%, but very few.
Right.
But 41% is the debt to income ratio. They do have to have some reserves. So we do require that they have 6 months reserves, but those reserves can be in a 401k or a retirement.
It has to be liquid.
They don't have to be liquid.
Okay.
Exactly.
Okay.
So interest rates on the bridge loan, that part, and do the new mortgage difference? What are
There's
they?
a big difference. Yep.
Okay.
So the bridge loan product is a flat interest rate at 8%. Everybody gets the same interest rate. Short-term financing, you're going to pay 8%.
Okay.
It's a higher interest rate than what the typical rates are right now, but temporary financing.
And you're only paying on the
paying
the rates or the interest.
It's an interest-only payment.
Yeah, so they're
correct.
paying interest. So it's
Yep.
okay.
And then the interest rate on the new product is just based on whatever the market rates are,
Right.
whatever they qualify for.
How about cost to do that type of do a bridge loan and into the next one?
So fees are minimal. There is that's a $500 administrative fee. So it's basically for us to be able to do all of our paperwork. We do not issue a title policy on the new home, so they don't have to have a full-blown title policy when they refinance on the bridge loan. So we don't have to do a full title policy.
Okay.
The only thing we do is a title search to make sure that the property is free of any other liens and that we're paying off any liens that are associated with it. And the title searches are relatively inexpensive. And then you have your recording fees. That's it.
Right. So as far as how often, is that your most popular product or?
It's a popular product for some specific loan officers that utilize it a lot. And I'll give you an example. We have Kay Davis. Shout out to Kay Davis.
Kay Davis. All right, Kay, what's up?
Kay Davis, who's in our St. Clair market, she does a lot of construction loans.
Yep.
So, if you're dealing with borrowers that are doing construction loans, getting them from that point to where the house is going to be ready and they need to be able to utilize the funds that are in their existing property, it bridges that gap for them. They're waiting for the house to be built. And, I don't know how much you guys deal with the like site builds,
Yeah.
like spec homes.
Spec homes.
Yeah,
Yeah.
yeah.
But I didn't even think about that aspect of it.
Well, because you're talking about, so for time frames for that, because usually you're talking 6 months to a year for a home.
Right.
Will the bridge loan cover that amount of time?
Well, you're closing simultaneously.
Oh, yeah, that's true. Wow.
So,
Look at that.
yeah.
So the house is going to be ready. You're going to be moving in anyway.
Right.
So she utilizes it a lot with her construction loan partners. I think that there's a lot of loan officers that don't, here at Union Home Mortgage, that don't take advantage of the product.
Right.
It really is an awesome program that more of them should be taking advantage of. And I think part of it is they're just not out coaching their real estate partners.
Right,
And
absolutely,
bringing
because
out the
it's like anything else, right? If you're unaware of it, one, or if it's confusing to you, then you shy away from it, right?
Yeah.
But if you know the details inside now through coaching and through being very familiar with the program, then it becomes a no-brainer for you.
Well, and then it becomes a tool in your guys' tool
Absolutely,
belt, too.
absolutely.
I mean, I'm sure you guys probably didn't know. I think Carrie was the one that mentioned to you that we had this product.
Well, we had a meeting a few weeks ago, and there's somebody else explaining how they referred it to someone else as a bridge loan, and that's when it all started. Carrie mentioned, and we started talking about it. So most agents don't know this exists out there, I don't think, and how it works,
Right.
and that's why we wanted you on here, because honestly, I mean, I've been through it one time discussing it, and this helps to even further explain a little bit more about it, because we needed this is like in our toolbox as well,
Yes.
that we could share this with our customers, so that this, in our viewers, that this is something that we can use. So yes,
Well,
and
Paul, like
I
you
think
said,
you're right. A lot of agents don't know about it. The mortgage reps need to show that you guys have that.
Yeah.
if you have confidence in it, all of a sudden your purchase agreement that's at the bottom of the pile, it slowly moves itself up to the top of the pile, because now all of a sudden there is no buy sell contingency.
Right.
Because that's the one that kills you. I mean, it just people just go, oh, sorry, that goes over there. I mean, it's crazy.
If you look at the way the business is right now, that agents that are in the business, they're already saying, if you got to sell your house, it's contingent on you selling your house. You're not going to be able to buy a house. But with this product, you are able to buy the house. You just need to be
It gives you
exposed
another
to it.
option.
Well,
Yes,
it almost erases
So
that.
now
It's
it
not
does
necessary.
erase
It's
it,
not
because you
necessary.
can explain it to a seller. All right, you're selling your house. This is what we can do to get you that next house. Because this is one of the things right now that we're, I think, part of the supply and demand issue is that sellers that do want to sell and move have no option if they have to sell their house first. This fills that void that's there.
Absolutely.
So we can get more houses on the market if people start using this product.
Exactly.
And if they're exposed to it, the more exposure you have to it and have an experience with it, it makes it a lot easier to use it and do it again.
It kind of helps with that seller's reluctancy to,
Right.
Right.
And not only that, the agent's reluctancy of trying to help a seller that wants to move, not
And not
having
having an
not be able to do it. Yeah,
And it
not
gives
being
you
able to
one
do
more
it.
option.
This is another option.
A good option.
Right. A really good
A very
option.
thought out and very solid
Sensible option.
option.
If
John's
you
gonna
really-
start doing it now.
Yes, he is.
Yeah. I
The
think
bridge
it's a great
loan
product.
king of Allen
Yes,
Park. That's what we're going to start
We
calling it.
didn't have anything up until recently. The bridge loans weren't around. I don't know how long you guys have had it, but bridge loans weren't around, and we had discussed it,
Yeah.
and now we're seeing them come back. And
Well, and like I said, there's very few places that are offering them right
Right.
now. It's just, one more tool that Bill Cosgrove, our president and CEO, has put out there for us to be able to use and,
yeah,
And you're not asking for world-beating things. You're asking for
No.
a decent credit score.
Yep.
720 is a pretty decent credit score, right? It's pretty. I mean, it's not 760 or some ridiculous 800 or something. It's not
Right.
not bad at all.
So what
So
kind of
doable.
number? So not looking for exact numbers, but is this a pretty popular thing right now? I mean, do you see it growing?
I
This-
see
this
it
tool?
continuing to grow as our loan officers get out and promote it more. And that's definitely been an effort of mine, is to, try to educate our loan officers a little bit more on it
Right.
and get them a little bit more just comfortable talking about the product and being able to at least present it, because I don't know how often you guys are doing regular meetings. I know for a while
Yep.
COVID has kind of put a
It's
little
starting to
bit
ease
of a
up. It's starting to ease up.
which is great. And so, we've been kind of sitting back on the back burners,
Yeah,
not
that's
being
true.
able to really get out and talk
Right,
to
yeah,
anybody.
right.
So, now that things are opening up a little bit, I think it just gives us more opportunity to get out and have those conversations, to be able to, provide you guys with the education about what we're doing and what's available to you and what these tools are. And, if you don't mind, and not to take us off the Bridgeland product, but since we're on the subject of tools that you can use to help you when you're trying to win a deal, one of the other things that Union Home Mortgage has implemented through some technology with our IT team is that we have the ability to run a property address through our automated underwriting system.
Desktop
It gives
underwriting.
you
Desktop appraisal. you're talking
yeah,
about?
so
Desktop appraisals. Yeah. That's
he's talking
That's
like
phenomenal.
he knows the language, right? He's
Desktop
like, I know
appraisals
what
are-
DU is.
those- I tell you what.
Studied a little bit before you came on.
no. So I don't hear about those much on new purchases. I hear them a lot on refis.
But DU, well,
Yeah.
DU and LP. So loan prospector is Freddie Mac, DU is Fannie Mae.
Yep.
So if you're writing an agency loan, everybody's using it.
Yep.
Everybody has to, right? So, but that's the engine that has the potential to give you a property inspection waiver, right?
Right.
So I don't know if you've ever come across contracts where the lender says, hey, we have a property inspection waiver and we don't have to do an appraisal.
Yes.
And then the borrower can choose if they either want to do one or they don't want to do one. Well, we have the ability to run it prior to you actually getting the contract accepted.
Really?
Huh, interesting.
I know, right?
Huh,
So
yeah.
what that allows us
Now is that
I know,
specific?
I got some
Is that
deals.
specific to you guys? I mean,
I think there's a few other places that do it. It has to do with how we set up our technology.
okay.
Um,
That's impressive, because that means, that's another, again, removing any contingency you're going to remove, easier it's going to be.
Absolutely.
So there, it's always going to be a borrower that's putting at least 20% down, right? But if you have the ability to say, hey, I've got this customer, they're pre-approved, they're about to put an offer on this house, and hey, Paula, I want you to run this property address. Can you tell me if we've got a property inspection waiver on it?
Yep.
So then we can take that contract and say, PIW, no appraisal needed. And then you
That's pretty
submit that offer and you don't need an appraisal. Now, there's, again, caveats to everything. If
Yeah.
anything changes, right?
Yeah.
The borrower says, well, I don't want to put 20% down. I only want to put 10% down. Well, all deals off, right?
Right.
So
Yeah.
everything
No.
goes out the window if anything changes in our findings. But it's still just another tool to help you get your
Yeah,
offers accepted.
That's interesting. Now, do you see that a lot?
Again, same thing. We have some LOs that utilize it on a regular basis. And I'm going to give lots of shout outs.
That's
Ken
okay.
Debus out in our.
What's his name?
All right,
Ken
Ken.
Debus out in
All
our.
right, Ken.
job, Ken.
Ken the Diva Divas.
He is, yeah. So Ken, who is our sales manager up in the Troy office, has used it quite often and has actually had that win bids for him where he can, and asking price bids, where
Yeah.
they accept his asking price versus something
Instead of
that
going
went
over because of that. Yeah.
because they don't have to worry about the appraisal waiver.
That's pretty slick.
Mhm.
That's very
So,
slick.
so that's a really good point. So, if they want, when they had appraisal waiver, they had inspection that when you put that under desktop underwriting, does it give you a value? What if this person goes way over the value? What the value's showing? Is it still waived?
Not necessarily. So when we're putting that number in, we're putting the number in based on
Okay.
what we think the offer's going
Right.
to be.
Okay.
Right.
Offered purchase
Because
price. Yeah.
yes, as part of that, as part of DU's engine, there is like a search that it does where it's like validating the
Right.
value of
Right.
that property. And so if it's way overvalued and they're putting 20% down, you may not get
Right.
a property inspection waiver. And I'll go back to that same example that I was just talking about with Ken.
Yeah.
The borrower the maximum that we got the property inspection waiver on with that property was like a 460 value.
Yep.
But if we went anything over 460, so if we overbid the asking price, then we were losing the waiver.
Right.
So those are all things to consider.
Sure,
when
sure,
we're,
sure.
you know,
But
looking
but
at
if
that as an
you
option.
you're basically, because you do appraisal gap coverage to put the seller at ease about appraisals, yeah?
Right.
So you're doing the same function with a different price.
Right.
Yeah, that's pretty cool. That's neat. I don't see that often.
No, you don't see it very often. I don't think that there's a lot of lenders out there that offer it as an
That's
option.
pretty cool.
But it puts the buyer's peace of mind at ease because if it's guaranteed, they don't have to worry about it. They're going to get the
Right.
mortgage for the full amount, whatever the amount is.
Right.
So that's a really
Well, but you're more interested in the seller being at ease because you want your offer accepted.
right. But the
Well,
buyers
there's
Yeah,
benefits on
yeah.
both sides.
right. But the buyer's got to be chewing your fingernails, man. What's the appraisal going to come in? You don't even. It's not even a concern.
Mhm.
If it's low, I have to bring money to closing. If it's is it going to work out? So yeah, that's a really nice thing.
That's
nice.
awesome.
Very, very nice. I like you brought. That was a very good one.
Paula, we
See, there we go.
we
That's an
absolutely
experience. That's experience loan off.
love having you on today.
Hold on.
Don was like this the whole time. Every word you said, he's going to store. He's going to use all the tricks that you taught him. Because I just want there he is right now. He's
Yeah.
And then
That's all
answer
you go
my
to
name
crazy.
right next time.
Wait. Hold on. Wait. To the camera. What's her name?
Satowski.
You're killing me.
Hold on.
Swatowski.
Let me break it down.
Swatowski.
Okay, it's spelled S-A-W-I-T-S-K-I.
Saw it. Saw it ski.
Saretsky.
Saretsky.
You're killing me.
Saretsky.
God dang it.
So it's
So we're going to do one
I'm
real
sorry.
quick. Paul, if you want to hang out with us for a minute, we're going to do one quick story from the road because we're about 36 minutes now. So we got a bunch of great
Oh,
information,
boy.
folks. Go back and watch. Paul talks about two very important things. One being the bridge loan product that they offer, and then two, the desktop appraisal where you wouldn't need an appraisal on something. Two great things from Union Mortgage. So thank you so much for doing
Thank you
that.
guys for
Absolutely.
having me. It was so awesome.
Thank
So
you.
I want
Great
to share this,
job.
Don, with you. This weekend was a very manly weekend, just so you know. Okay, and let me show you why. On the bottom right. Yeah. So make that screen bigger if you wouldn't mind, please. Thank you. So right there, if you see, is my good friend Tom Wilkowitz of the famous Wilkowitz family that we talk about on the show quite a bit, and myself. We both have a couple of chainsaws in the air. So it was chainsaws, chains, and trucks on Sunday.
Let's see your fingers.
My
Show your
fingers there.
Have
I'm
you got
holding
them
that
all?
thing up in here. I got
I
them
know
all.
you have all your fingers.
I got them
Show
all right
them.
here. Yeah,
All right.
yeah.
What
So
about the toes?
you know how many people said that to me? I had at least a dozen people text. You still have all your digits, all your
All right.
appendages?
There
Yeah.
you go. All right.
So we took every bush and tree out in front of the Groseville house, took it from all over the place, in the hot sun, or we cut it at the base and dragged it away with trucks. It was awesome. You cannot ask for a more testosterone-filled environment when you have chainsaws, hard metal chains, and trucks. So that's the picture right there. Tom and myself, his son Eric and his son Zach, the four of us came. The three of them came over, and we just cranked it out. It was awesome. It was absolutely awesome. So a lot of fun stuff. So
next week we'll show you the other ones. The one I did that working on
yeah.
some sewer stuff. So
Paul, we would love to have you back on another time. Hopefully Don
We'd love to.
didn't offend you enough by mispronouncing your name.
It's all good.
He'll work on it. All right,
I will.
guys. I'm Scott,
I'm Don.
I'm Mel.
And I'm Paula.
and we're talking real estate. See ya.